really just don't understand how much money really touches every aspect of your life, whether that's your food, what you do, like exercise, that kind of stuff. And I just think, it gives me a little bit more hope of how greener pastures going forward, because I think a lot of people are struggling with the fact that, their dollar just doesn't go as far every single day. They don't quite know what to do with it. So at the end of the day, I think, everybody's kind of searching for something to make them happy, give them life, give them some sort of value, give them something to kind of work towards. And, that's what Bitcoin has kind of given me. I think it's really just changed my mindset, trying to think for myself, which is almost a novel concept these days.
Welcome to the Rose Show podcast. Welcome to the Rose Show, your ultimate independent source for achieving true wealth. Today, I speak with Brandon Keys. He's the founder of Green Candle Investments. He's also a Spaces host, and he has his own podcast, State of Bitcoin and Macro Insights. Today, we'll be discussing Bitcoin and macro. He brings with him valuable insights that he synthesized from Bitcoiners as well as macro experts. And we will be discussing it today as we break it down for you. He's going to be giving us the inside scoop and the word on the street on what's going on in Bitcoin behind the scenes and beyond the headlines and news, as well as all of his valuable discussions he's had with macro experts. We're going to be talking about the Fed, rate hikes, recession, the real estate market, as well as Bitcoin, and what he foresees for Bitcoin in the near to long-term future. Valuable insights, interesting stuff. Stay tuned, watch the show, subscribe, and make sure you enable notifications too. Thank you and enjoy the show. Welcome to the Rose Show, and thank you for joining us today. Today, I'm here with Brandon Keys. Not your keys, not your coins. That Brandon Keys. He's the founder of Green Candle Investments. He's a host of some awesome spaces. He's also a podcast host. You might have seen him. The State of Bitcoin and Macro Insights. Love the combination of the two. How you doing today, Brandon?
I'm doing great. Thanks so much for having me on. I'm really excited to sit down here and have a great conversation.
Well, we're so excited to have you. You're such a nice guy. And you also meet with so many great people, and you have valuable macro and Bitcoin insights to share with us as you synthesize all that information, and you're going to bring it to us today. So we're so excited to have you. And you're also an entrepreneur, which is great. So why don't you tell us a bit about yourself? Let our audience know about Brandon Keys and your entrepreneurial journey.
Yeah, for sure. So I guess just a little bit about myself. So I ran track at the University of Memphis. Then from there, I went to grad school, got a master's in engineering at Texas A&M. So Giga Aggies. And then
engineer, that's awesome. I didn't know that. That's cool. You're so smart.
Thank you. On paper, I guess, right? But so my family's, my dad is an entrepreneur. He sells radio ads, and he's kind of been doing that my whole life. And my mom and dad work together. So I kind of knew, coming out of school that this is probably something that I'm going to want to do eventually. I just didn't really know what I wanted to do. So I got a job offer here in Tampa. So I moved out here, and the job was going well. I really did like it. But then COVID broke out, and they said no raises across the board for the company and all this kind of stuff. And I kind of realized at that time, the company was having the best year that it did have in quite some time. But, obviously the volatility of COVID and everything like that kind of caused, some issues here or there. And so I started my own kind of, I guess, analysis type of stuff with Green Candle, with me and a friend who was a former track teammate of mine at the University of Memphis. Then we both got different jobs that were remote that allowed us to kind of continue to do this, except his, after about a month of starting, they told him hey, no more of this content and internet kind of stuff. You need to keep everything in house. But I enjoyed it. So I decided to keep doing that. So not only do I have Green Candle, but I have, I guess like a real estate investing company is what I'll call it. I mean, it's very small. I'm sitting in a duplex right now, so I live in part of it. I Airbnb the other part, and I'm under contract for another house right now. So hopefully, fingers crossed, everything goes well with that. So I'm doing a couple different things, but all in all, the goal is to kind of keep continuing growing Green Candle and keep that podcast and everything like that. Keep it going. So.
Awesome. Well, thank you so much for that. I didn't know you were an engineer and a real estate investor as well. So we have lots to talk about. I want to talk about real estate for sure as we go into the macro part of this. So your podcast, and I'm going to just mention that again. I love that you have State of Bitcoin and macro, because I think those two are related. And we always talk about the finite supply of Bitcoin versus the debasement of fiat currency, inflation, money printing, lending, debt, and all that. So I'd like to start with macro. I think that would be a great place to start. And, let's start with the Fed meeting yesterday and Powell, a hawkish pause, talking about the dual mandate of maximum employment, price stabilization, inflation, bringing down inflation is number one still. What are your thoughts on all that and through this whole time period?
Yeah, well, I mean, hey, didn't you see the CPI numbers? It's at 3.6%. Everything's all peaches and daisies, right? Obviously, that's a little tongue in cheek there, a little sarcastic, but I think Powell has kind of continued to do what he's said, since the beginning of raising interest rates, that he's going to go higher for longer, more pain ahead. He expects unemployment to increase, a bunch of different factors. So I think the market at the beginning of this year was kind of fooled by that, almost like looking for a pivot by mid-year. And it seems like now, the market isn't even calling for a pivot until like September of next year. So it seems like, every time Powell kind of gets up and speaks, that narrative of the pivot gets pushed farther and farther out. Although Powell is kind of stuck to his guns. I don't envy Jerome Powell for the job that he's got, because it's definitely a tough one to chew off here. But it is something where it's kind of interesting because the Fed looks at various data points, right? They look at unemployment, they look at CPI, inflation, all that kind of stuff. But they're all lagging indicators, and no matter which way you kind of turn it, CPI is a very manipulated number. And unemployment, there's so many different jobs reports that, some of them look very good, some of them look very poor. And, at the end of the day, a lot of these job reports are based off of survey data. Before, I guess, the advancement of the internet and email, those surveys had, a 60 to 70% reply rate, because that was your civic duty to go and answer those surveys to kind of, help the government understand consensus data and all that kind of stuff. Well, now that survey data is down to a 30% response rate. And so we're looking at backwards facing data that has a very low percentage of response rate, all to make decisions that affect everybody. And so, when it comes down to this, it's humans that are, making decisions on data that isn't very, effective, or I don't know if effective is the right word, but maybe, I guess, accurate in a sense. And, because they're making these decisions on backwards looking data that isn't, 100% accurate, it seems like, the inevitable is that the Fed's going to make whatever move that they decide to make, whether that's, pausing completely or pivoting backwards a little bit too late. And we're going to kind of have some sort of a, I guess, bloody recession or some sort of a downturn because of that. And, it's all very interesting of the timing of things, right? Because the Fed has come out and said now that they don't expect a recession to leave until 2027. And, when have they ever really been right when they've come out and said a lot of these things? It doesn't seem like their track record is really all that great. So, all in all, to say, I think, the Fed and what they're doing, they're pulling the only card they really have, and that is, tighten interest rates, hurt the offshore dollar market, and that's frustrating a lot of these other countries that are maybe very energy reliant. We've had the BRICS countries come out and say they're potentially trying to, make some sort of other currency, whether that's their own cryptocurrency backed by oil, gold, or something along those lines, or, something else. So, it seems like what the Fed is doing is causing a little bit more of geopolitical tension, which, all in all isn't great either, with, obviously the war in Ukraine and Russia going on as well. So, there's a lot to unpack there and a lot of things kind of going on with the Fed. And it all kind of surrounds around the monetary policy and kind of the debasement of fiat currencies here. So I don't think it's a very bright outlook, unfortunately, but it'll be interesting to see kind of what cards they pull, whether that's printing more money or, quickly pivoting the other way, in order to maybe like ease some of those tensions and ease some of the lending protocols and things like that for, the American people. So yeah, that was a lot to say. So I'll pass it back to you.
I love it. Well said. It's so nice to have you in that chair this time. You're usually in this chair. So you mentioned so many great points, data lags. Absolutely. That brings up the question, will the Fed over tighten or are they under tightening? And, right now, looking at the money supply shrinking at the fastest rate since the 1930s, we're saying, oh, we're due for a recession. How severe is the question? It's not whether or not we're going to have a recession. So it's the lagging data. When you look at Indeed ads, ZipRecruiter, they're down. Job openings are down significantly. And I can tell you from my manufacturing business, I've had the huge influx of applicants for work. We always have an ad up. We're a pretty good sized business. And, we weathered the storm we talked about it on your podcast, 2008 and 2009. So, we've seen a lot occur and we're seeing a lot of applicants. So I think that's a sign right there. If you look at the job cuts that are going on currently, you got to look at the leading indicators, like you pointed out, and not all this lagging data that we have. So, Powell talked about unemployment. He looks at it going to about 4.1% next year. And then if you look at their projection of rates, they're in a 5 still. It's not like the pivot that the market was expecting. And we all knew that. We talk on these spaces and podcasts to a lot of the experts, the economists, and we know that it seems like higher for longer is the case. And even if they stay at this level, it's still tightening. When you look at, historical rates were not that high, but it's the whiplash that we've had. It's the recent past of being at practically zero for the past, 15 years since the GFC. So it's a real adjustment, and this will take time to work through the system. And I do believe we're in store for a recession probably next year in 2024. Yeah, absolutely. So let's talk about real estate. You are a real estate investor. I think it's so awesome that you're in a duplex, meaning that you don't just talk about it, you actually do it. So what are your thoughts on what's going on in housing? The rising rates lowers the price of assets. They're inversely related. So what are you thinking over there?
Yeah, so I think there's really two cogs of real estate, right? I do I guess the single family, so to speak, right? You can get like 1 to 4 units in an FHA loan, which is what I did here for the duplex. But there's also commercial. So I'll kind of start there because that's what worries me the most right now, right? Is like we saw, a mass exodus of, people, companies from major metropolis areas like, New York, LA, Chicago, San Francisco, a lot of these big cities during COVID. And so, obviously because of COVID, they pushed to the remote work aspect of things. Well, generally speaking, how these buildings are lent on is, kind of like a variable rate that sticks around for like 5 to 10 years or something like that. And those buildings are valued on their occupancy and their rate and their rental values. Well, businesses aren't necessarily knocking on the door right now in order to rent out these floors, rent out the office spaces. And a lot of companies left a lot of these major metropolis areas, or, their workers left to move to places like Texas, Tennessee, Florida, where I'm at as well. And so because of that, these commercial buildings are, 50 to 25% occupied with, a lot less rent roll that they've had previously. And so once those loans kind of come up and, they get valued, and, those loans are now, they're sitting underwater, those mom and pop investors that maybe bought this commercial building are going to need to sell. And that's going to cause a big issue, because I don't know if anybody's going to be really knocking down the door to buy those things either, unless it's, maybe a BlackRock or some of these big companies like that. And so, in my opinion, I think at 2008, the narrative was kind of, you know, that single family homes got lent out very easily. The mortgages were very easy to come by in 2007 and prior, and all kind of came to roost in 2008, nine time. I think that's kind of happening in commercial real estate now, where a lot of these buildings are going to go under, and unfortunately, that's going to affect a lot of the banks that have lent to them, and we've already seen kind of cracks in the banking industry with Silicon Valley Bank and a lot of these other ones with the intense rate hiking cycle that the Fed put us under. So, as far as like commercial real estate goes, I don't think that's a very great outlook going forward, as well as, the overall macro. But I think single family housing is a little bit different. If you talk to real estate investors, they'll always tell you it's, kind of by state, by area, by city, by neighborhood. And, I kind of agree with that sentiment, as cheesy and
Regional.
kind of like dodgy of an answer is that is. But it seems like, even, I have family from Chicago. I know downtown and like the closer to the city center is not doing as well as like the suburbs, for example, like the north side, south side suburbs, like away from the city center, are seeing a lot of appreciation in their homes. And I think we're kind of seeing that too in like, some of the bigger states, maybe like Florida and Tampa, where I'm at. You're seeing housing still do pretty well, because there's less inventory. Whereas, some of the bigger cities, maybe like in Austin or Nashville, that saw a big boom, I could see housing kind of go down a little bit because it got so overvalued and so many people moved there. And, now they're all kind of, waiting to quote unquote time the market to maybe buy their first home. So I think, in cities that we've already seen people move away, right? A lot of the blue states, the Californias, the New Yorks, Illinois, we'll see housing kind of stagnate or maybe even decrease a little bit because of the rising interest rates in certain areas. Obviously, certain neighborhoods, I think outside of the major cities will do well, but inside those city centers are not going to be as prosperous. And then, I think in the bigger cities that saw a boom, maybe like the Austins, the Miamis, we'll kind of see that flat line. Maybe some of the ones that were overvalued initially because of, however many people were moving to these cities, will go down slightly. And I think there's still going to be cities that are going to do pretty well. I mean, I'm pretty bullish on the city of Tampa. I mean, there's a lot of growing jobs here, and I think I saw like a stat that said 56% of people, or 56% more people moved to the state of Florida than moved away. So Florida is still growing rapidly. There's an increasing job market, and wages and companies are going up here in Tampa. So I think it really depends on where you're at, and knowing that. And anecdotally, I talked to a few real estate investors that are very bullish on the Carolinas too. So I think it really depends on the region of your country, of a region that you're in the country. But I think that there's less inventory just kind of across the board, and that the growing interest rates environment, mortgage rates going up, makes it more difficult to get into homes. So you're going to have less competition, which is good, because in the 2020 times, we had people essentially bidding $100,000, $200,000 over asking, and I don't think we'll really see that anytime soon. So we'll see, people maybe go 10, 15, or maybe underbid slightly. But I think that the environment that we're in now is a little bit more of a healthy housing environment. It's just kind of unfortunate for I guess the people who are trying to get into their first single family home, or maybe that forever home. It might be a little bit more difficult because 60% of homes now under mortgages have that mortgage, I believe, under 4%. So now you can get a mortgage probably around 7 to 8. So I don't really see those people really selling their homes anytime soon. So that inventory is still going to be pretty scarce. unless, the theory kind of going around is a lot of these Airbnb investors are going to have to sell because, Airbnb bookings are down so much. So, but that's kind of like a unique case. I think, a lot of people talk about Airbnb as a negative. I think it's not necessarily as big of a negative in some of these major cities as people who aren't necessarily in the, I guess, real estate investing game like to think. And the reasoning is that, if you go to these major cities, a lot of them have regulations on how many Airbnbs you could have, or they make it kind of difficult for first time investors to get in there and purchase an Airbnb. And usually, you try one, maybe it doesn't work out or something like that. Or you're buying in a place where there's a lot of vacation rentals anyway. And so that those markets are really never going to hurt for vacation rentals. So, all that to say, I think, it really depends region by region for how region by region for housing. And then for commercial real estate, I think just overall, it's really not in a great situation, just kind of, across the country.
Great points there. Well, that's optimism. I love that. But I agree with you absolutely that real estate is very regional. And I think the COVID hotbeds, as they're called, are getting hit. And there's a lot of Airbnb listings that have increased lately. And, as there is tightening going on, margins compressed, people are cutting back. And it's very concerning what can happen there. Higher rates bring down asset prices. And like you said, home sales are down. There's lower inventory. I think it's historical low inventory in my area, in the New York metro area. So with that, coupled with home prices are still elevated. Usually the process is you have inventory trickle up and then home prices start to come down. However, we have the Fed locking people in their homes because they have locked in rates, 2-3%, the lowest ever, I think, right? We had the lowest rates. We had practically zero rates since the GFC. So you have that phenomenon going on. And then you do have extremely low demand because it's probably the most unaffordable market in real estate, I think, over 40 years. So you have all that going on. Home prices are still elevated. But then we see that in commercial real estate, we have vacancy rates up high, especially in office. People, COVID changed the way people work. Remote work is everywhere. It changed the way we live and work. So there are a lot of headwinds going on there. There's restructuring going on. They're going to find a way to restructure, but there's definitely going to be more pain to come. And job, layoffs really occur once in a recession. So regardless if you're locked into a low rate, you lose your job, you can't make your payment. And then if there is all the shadow inventory, like we see with Airbnbs, all these listings and income producing properties don't produce income, if that floods the market, then we'll have to watch and see. We hope for the best, of course. But then, debt yields and cap rates, when commercial real estate refis, when they're lower than interest rates, that's also very concerning. So lots going on. And hey, Brandon, maybe you can get some better deals in the near future, right? We always hope for that, right? Yeah, and you can add to your portfolio down there in Tampa. Florida is a great place. I grew up there. There's always seems to be a demand for that warmer weather and the land of opportunity. Lots going on down there. So thank you so much for that rundown. Very smart there. Yeah, real estate's very regional. So I want to talk about your thoughts overall with this recession. Let's just wrap up the macro with the recession. I'm just going to go into my thoughts. I think the Fed policy errors back to back. I think they lowered rates too low. Then they did a whiplash and they raised rates too fast. They waited until after they tapered their asset purchases. It was an inflation bias from the first 2 decades of 2000s. They thought that, they weren't going to be triggering inflation. They were waiting for the maximum employment threshold to be hit. I think that if they had preemptively raised probably end of 21 instead of waiting, inflation may not have risen as high. Of course, inflation is always and everywhere a monetary phenomenon. So it would have happened due to the fast increase in the money supply during COVID. But there was policy error back to back. What can we do at this point? So what are your thoughts going into this year, next year, and forward? And do you think stagflation is a possibility?
Yeah, I mean, I definitely think it's a possibility, but I kind of subscribe to your theory that the recession is going to happen sometime next year. But with all that being said, I think, obviously 2024 is an election year. So I think Powell is going to try to make, the people that be very happy. And so I think it's going to be an interesting time where Powell is, kind of trying to stay to his, Volcker ideologies and, keep rates really high. But they might do some quantitative easing and print some money in order to kind of delay that recession. And
Ooh.
that's why they're kind of prepping us right now and saying that the recession isn't going to occur until 2027. And so, with all that being said, I think either way you word it or look at it, the Fed's going to do what they can to try to kick the can down the road. And that's going to make this recession even more worse because, what we're seeing is that the Fed, obviously injected think about like 50% of the overall money supply in the past 5 years. And that's not unique. That's something that's occurred, in the past couple decades, like pretty frequently. But, obviously all that printing kind of compounds and, that compounding makes the volatility swing even more, which will make the highs even higher and the lows even lower. And so I think that's what we're going to end up getting to is that, the lows of this recession are going to be worse than 2008 and, hopefully not as bad as the Great Depression. But I mean, I don't want to be all doom and gloom, but it seems like that's, kind of the way we're heading towards because of, like you said, the policies that have been in play. And it's very tough, to kind of sit back and look at what Powell's doing and be like, they raised too late and then they, are now going to, probably pull back too late as well. But I mean, he's got a lot of pressures when it comes to all these things and, political pressures and everything like that. I mean, he wants to be, still in a Fed chair when the next president gets elected. So, I mean, like, I think he's just going to do whatever these policymakers want him to do in a sense. And he's going to, although he's not supposed to have that kind of political, I guess, leaning or political, I don't know what the influence, so to speak. I think he's going to get that because, 2024 is going to be another big election, right? I mean, we have, already controversy kind of stirring up around that right now. And so, yeah, I mean, I think that the recession should occur next year, but they're going to do what they can to like push it out. And they're prepping us now to say 27, but I think it'll probably be closer to 25, 26, like, about a year or two after 2024, because, they've even talked about like not even starting to pivot and decrease the rates until 25. So, I mean, and they've kind of stuck to their guns and stuck to everything that they've said so far. So, and generally speaking, when the Fed starts to reverse course and pivot, that's usually when a recession starts. So, I think we're kind of in this period of stagflation now, and we'll kind of be in that period as things kind of like slowly decline. And then when the pivot occurs, that's when the floodgates will open. That's when asset prices will increase, and then everybody who's been sitting at this time and unable to afford a home, their personal savings has been depleted, their credit card usage has been increased at a rapid rate, while the rich have been able to stack assets. It'll make, do what every recession does, make the rich get richer and the poor get poorer, and that gap will continue to widen, unfortunately. So I think, at the end of the day, the recession will occur, but I think the powers that be will try to push that off until at least 25 or 26.
Yeah, well, election year, that is the key right there. And it's politically based, general perception of people. And I'm sure they don't want it to be too bad during the election year. And I think it has been the historical pattern. So well said there. I mean, rising rates affects people at different times. Commercial real estate's already refinancing. And then we have smaller businesses, more sensitive. Bigger corporations have until 24, 25. So yeah, the recession may be pushed out, but it's inevitable, in my opinion. Inflation is entrenched in pockets. It's sticky. Core is very sticky in the high fours. And, margins are compressed and there's a higher cost of money, higher cost of debt and capital. And like I said, it takes time to work through the system and those margins will continue to get compressed. And we have bankruptcies up significantly year to date and default rates are up. And like you mentioned, Brandon, it's like a K-shaped recovery. It's unfortunate the disparity between the wealth levels continues, and it's very unfortunate for Main Street. The debt to GDP is about 120%, 120% right now, I think. Yeah, it was 118.5% in quarter one, then quarter two now 120% and rising, right? That means we're more than double debt per our output. And that's only increasing. The government just keeps spending. So I think we go right into an alternative asset class, the possible global reserve currency that you talk about, Bitcoin. So we know it has a finite supply of 21 million, and it could be the future, right? The future of money. So Brandon, tell us about the state of Bitcoin.
Yeah, great question. There we go. And a nice plug for my show name as well. But yeah, I mean, I think Bitcoin is in it's a bear market. There's no kind of ways around it, right? I mean, there's Bitcoin goes in these cycles, every kind of 4-year cycles. People kind of like to equate that to the halving period. But I kind of like look at it as more of like a macro level thing. If you kind of look at how Bitcoin goes through its price swings, it lines up fairly well with the business cycle as well. And kind of these major macro events. And so for those who don't know that what the halving is every 4 years or so, the amount that is mined or kind of put out into the ecosystem is cut in half. And so the next halving period is coming up here in May of 24. So it's going to be a very interesting time because, Bitcoin's first, this Genesis block was mined in 2009. And so, kind of skating through all this time, it's had a relatively, easy route, right? I mean, zero interest rate environment where, growth in tech and kind of these, I guess, quote unquote, riskier assets, we're kind of allowed to prosper. And so Bitcoin has very much, kind of been on the beneficiary of that. Well, I mean, this time they'll be going into a halving period with, some uncertain macro times, which will be very interesting to watch. I mean, we've seen, as I kind of lined out, the money printer kind of, almost funneled into Bitcoin and a lot of these tech stocks. Obviously, we saw the GME run up, like a lot of those kind of, I guess, investments from retail have kind of gone to some of these more, I guess, riskier, risk-on assets. And so Bitcoin right now, as it stands, though, holds in the hands of, maybe the diamond hands, the hodlers, as they like to call them in the Bitcoin community, because I believe like of the wallets that have over 1 Bitcoin, like 60% of those wallets have not moved any of those funds in the past 5 years. So, we have a lot of people who are sitting on the sidelines holding that Bitcoin and just determined to keep on holding. And I think that's what's going to drive the price of Bitcoin up in the next period, whenever that bull run occurs. And I think it's interesting. We're having a lot of building going on. We've also had a lot of FUD in the crypto space of things, which has, in turn kind of rolled over into the Bitcoin space. But I think, there's a lot of development going on in the Lightning Network for payments, remittances globally. We're seeing hash rate of Bitcoin miners increase for the first time in a bear market ever. And we're seeing a lot of, more distrust when it comes to, the overall, government situation, inflation, kind of what people are being told. And I think more and more people are questioning the current monetary system just because of inflation. They're going to the grocery store. They're realizing, hey, eggs was a perfect example, right? You could get it for $3-4 a carton, and then it got up to almost, $12, and now it's sitting at $8, which is, all right, but it's still not the $3-4 we were used to, a couple years ago. And so I think people are kind of, waking up to the fact that, whatever they were getting paid before, whether it's, $100,000 or whatever it is, isn't going as far as it used to. And I think because of that fact, people are starting to understand, like, hey, this inflation thing just isn't great, and I think even from, people who don't know about Bitcoin just yet, they're frustrated with how things are going, and maybe they just need somebody to kind of, I guess, edge them towards Bitcoin, or edge them towards putting in that work, and learning a little bit about, I guess, what the hard money principles really put forth. So I think the overall state of Bitcoin, it is a bear market, but there's a lot of positives going in on it, right? I mean, we have three presidential candidates at least have mentioned Bitcoin, maybe even more. With RFK Jr., Vivek, Ron DeSantis has said you can keep doing Bitcoin, whatever that means. So we're getting a lot more press around Bitcoin, although the price isn't as, quickly running up. But, at the end of the day, price is kind of the ultimate signal. People still kind of revolve around their viewpoints of Bitcoin when it comes to the price. And I think, we're kind of primed for a unique situation next year, whether that's, the money printer kind of being turned on and almost funneling into Bitcoin, or not, and seeing how Bitcoin reacts with the halving period, and with, kind of an uncertain economic time, potentially in some stagflation as well. So I think all that to being said, I'm pretty optimistic with Bitcoin going forward. And I think, as it stands right now, it's in a good spot. A lot of Bitcoin companies are being built. Obviously, the ones that are, able to survive this bear market are going to come out stronger on the other side. But I'm not trying to minimize how difficult it is right now, because I know a lot of these Bitcoin companies are having to trim fat, as well as, a lot of these tech companies as well. So all in all, I think I'm pretty optimistic with Bitcoin going forward.
That's great to hear. And you interview so many in the Bitcoin space. So you synthesize all that valuable insight that you receive, and you break it down for us. So thank you so much for that. The presidential candidates next year, they're already starting to, all of them have thoughts on Bitcoin. It's becoming, I think, an issue. I think they might be part of the debates as well. And I think this is the first time we've seen Bitcoin be spoken about as much as it has with Vivek. I think we know Robert F. Kennedy Jr. And it's just a very fascinating time period we're in. Definitely in for some difficult times next year and going forward, but these are definitely exciting times. A lot of history in the making, and in the Bitcoin and economic and the markets, there's so many moving parts, and there's so many possible scenarios that can emerge. Of course, we hope for the best. So, Brandon, I want to ask you, how long have you been a Bitcoiner? And tell us what Bitcoin means to you.
That's a great question. So I like to say, like, I kind of started to discover Bitcoin in like 2016, 2017 time.
Wow.
So I was in graduate school at the time. I was driving Uber to get a little bit extra beer money. And I read an article about, crypto and all that kind of stuff at that time. And I was listening to podcasts. So I tried to trade it. I traded a little bit on Robinhood at the time, and it ended up working out all right. So I got a little bit of beer money, but then it kind of stuck with me, with Bitcoin. And I was listening to podcasts. I listened to We Study Billionaires. It was with Preston Pish and Stig Broderson. Now I don't think Preston's really as involved, but it was before he had a Bitcoin only show, which he has now. He mentioned Bitcoin. He talked to two people, Saifedean Ammous and Plan B, who, kind of developed the stock to flow model. So Plan B was talking about how Bitcoin's going to go to 100,000 in the next 4 years. And Saifedean was talking about kind of like the economic aspect behind it. So at the time I was like, all right, well, like, this is something that is interesting and I need to kind of continue to dig into. So I, kind of just kept educating myself. I didn't have much money to put in at the time because I was in grad school. But once I got my first big boy job in December 2018, I was kind of all in, and every paycheck I was just continually putting in there from there. So, I guess I was kind of started in 2016, 17 ish time. But, I kind of got it, I guess, more embraced into the community, or more entrenched into the community, whether it's Bitcoin, Twitter, and all that kind of stuff, when I started Green Candle. And that was April of 21. So, Yeah, I mean, it was overall just, great stuff. And Bitcoin, what it means to me, I mean, it's just changed overall my thought process of things. Like, you really just don't understand how much money really touches every aspect of your life. Whether that's your food, what you do, like exercise, that kind of stuff. Like, I mean, I've just kind of been more on like working on myself and kind of working on those principles. I mean, like the entrepreneurial aspect of it too is kind of, helped me kept me inspired, when it comes to Bitcoin and meeting all these, great entrepreneurs in the Bitcoin space and outside of it as well. And I just think, it gives me a little bit more hope of how greener pastures going forward, because I think a lot of people, my age or maybe younger or a little bit older than me, kind of around this, millennial, older Gen Z population, are struggling with the fact that their dollar just doesn't go as far every single day, and they don't quite know what to do with it. So maybe they turn to something to go partying and doing all that kind of stuff all the time. And obviously all that stuff is whatever. But at the end of the day, I think everybody's kind of searching for something to make them happy, give them life, give them some sort of value, give them something to kind of work towards. And that's what Bitcoin has kind of given me, is the not only something to try to pass on to people, try to educate people when it comes to personal finance and money and kind of the issues surrounding it, but also allowing me to kind of see where I could help some people out and be an entrepreneur in that aspect of things. So I think it's really just changed my mindset, especially leaving college and kind of getting that first job and then realizing like, hey, as much as you love your company that you work for, at the end of the day, the company's going to look out for the company. And so I think, it's taught me a lot of independence and kind of, just trying to think for myself, which is almost a novel concept these days.
I love that. That was great. It's hope, and you never give up. And that's the core of entrepreneurship, is thinking different, thinking creatively and out of the box, and always finding a way, because there is always a way. And you just never give up. I love that. That's great. It's a mindset, short-termism versus long-termism. Dr. Safadine Amus is amazing. We had him on the show a little over a month or two ago or something like that. And we talked about those concepts in Austrian economics. And, it's the Keynesian economics talks about the government, stimulus and creating the demand. And at the same time, all that government spending debases fiat currency. It devalues our currency. It causes inflation. And so Bitcoin having a finite supply of 21 million is, you don't have that incessant quest to constantly have to keep growing. And I mean, Michael Saylor said it's about 10%. You got to keep growing every year by 10% or you're losing value. And that changes your mindset, because if you don't feel your money is getting any return, there's no savings there, you tend to want to consume and spend it today over saving it for the long term. So it's that short-termism versus long-termism. And you mentioned earlier, I wanted to bring that up, it's always about liquidity. And so liquidity is key. And so we may be in for some difficult times as we have tightening liquidity going on. It's just starting to begin and it will continue. How will that affect Bitcoin? And that is a question that many people have. So I like to ask you, everyone always asks, what's the price of Bitcoin? What's the price of Bitcoin going to be? None of us know that. But from all the people you've spoken to in this amazing Bitcoin community and your valuable input, Brandon, what are your thoughts on the trajectory of Bitcoin into next year and going forward? And feel free to go out 5 years from now, 10 years from now. Do you think Bitcoin is here to stay? And where do you think it may end up?
Yeah, 100%. I mean, I definitely think Bitcoin is here to stay. It's always interesting, right? I mean, we talked about the halving cycle, but usually that is like, it's not, the price is not going to shoot up directly after the halving. Usually we see some sort of delay. And since every single halving cycle, we see the run up kind of be delayed a few more months out, opposed to, just relatively close to the halving cycle. So I think like around this time next year, we'll maybe see close to like the all time high, maybe around 50K ish around this time next year. But I think, which obviously, I mean, that's 100% increase from where we're at right now. So, I mean, that would be great. But I also think, come 2025, then we'll see probably six-figure Bitcoin. We'll see it over 100,000. I think, in this next cycle, the last cycle we reached like 69 to 70,000. I think, we'll see a lot more people kind of coming in on this one. And we had a lot of bad actors in the last run up. We had FTX. Some of these other exchanges look to have a lot of chinks in the armor, so to speak, with Binance US, like having a lot of people resign. And a lot of these crypto companies, I think, were kind of issuing paper Bitcoin. And so I think in the last run up, that paper Bitcoin, because that was being issued, kind of suppressed the price. Maybe we would have seen 100K Bitcoin last cycle. Who really knows? Without the the FTX debacle and a lot of these other actors just kind of issuing Bitcoin, but not really. And so I think we'll see over 100,000. I think it would be pretty I mean, I think the top for me in this next cycle would probably be like 200,000. I think it might be, the meme poetic aspect of things would be as it went from 69,000 this cycle to 420,000 the next one. But I mean, that would just mean we're, I guess, essentially living in a simulation at that point. But I think like, long term, it is here to stay. I think we're going to see less of a, I guess, a dramatic increase, unless we kind of keep continuing running that money printer. But I think in the next 10 or so years, I wouldn't be surprised to see a 500,000 Bitcoin, or $500,000 per Bitcoin. So I think that's kind of where we're going, especially as our fiat currency gets. The inflation keeps getting up, the valuation or the value of a dollar keeps going down, and Bitcoin supply stays finite. I think it's just inevitable, right? I mean, as Michael Saylor, who you've had on, says, Bitcoins goes up forever, Laura, right? So I mean, that's all I kind of continue to think about is like the longer your time horizon with Bitcoin, the more you'll be rewarded. And for those who haven't really gotten in the game just yet, I think anybody that's held Bitcoin for 5 or more years has never really lost any like money when it comes to the fiat terms. So I think the longer your outlook, the more you will benefit from holding Bitcoin.
Love that. It's about long term, and I agree with that. And as Bitcoin goes on, it gets even better. And with each halving and everything, it's the supply it's just it's the hardest money ever created. And that's the best way to sum it up. And it's freedom. And I think in the purest sense it's freedom. And, US dollar is the global reserve currency, and it's the most stable and liquid. And in my opinion, I don't think it's going to get dethroned anytime soon. However, Bitcoin is a great alternative currency and global reserve asset, and it could be at some point the global reserve asset. So excellent points there. Thank you so much, Brandon. This has been so much fun. Awesome. And please tell our audience how they can find you and follow you and listen to you on your podcasts.
Yeah, for sure. Thank you so much for having me. It's been a great conversation. I love, coming on your show, and I love the work that you do. So thank you so much for everything that you do as well. But if anybody wants to follow me, I'm most active on Twitter. Green Candle IT is the handle. And then I'm trying to grow the YouTube. So if you guys want to check out the YouTube, you can search Green Candle there and you'll find me. I post both my podcasts there, State of Bitcoin and Macro Insights. And then if you want to look at just the audio, you can find both of those podcasts anywhere you get audio podcasts as well. So yeah, go ahead and check out my stuff if you kind of liked what I'm saying here, and continue to watch the Rose Show here, because it's great stuff, and I really appreciate all the things you do.
Thank you so much, Brandon. I will definitely put all those links in the description for everyone to check you out. And thank you so much for all you do for the community. Thank you to the listeners as well.